Hey traders, and welcome back for another technical analysis. Elliott Wave Dose right here with yours truly, Richard, coming from Lionheart Elliott Wave Analysis. Tell you what, today is the 25th of August. It is 3 p.m. Eastern European Standard Time, and today's video is all about the indices and market sentiment and basically the fear over greed period. Now, what I have here in front of me is the weekly chart on the VIX, the volatility index, and you guys, the ones who have been following me for a while back now, basically you do know that I was actually ready for the um, February 2018 drop, October 2018 drop, and then again the COVID drop as well. So right now, okay, the markets are actually going up post-COVID, right? With starting with March 2020. So I have here in front of me, as I said, the VIX, the volatility index chart, and this is basically a fear over greed sentiment indicator, let's say. So it's pretty simple. For those of you who don't know what the VIX is, I'm going to say it again and again and again. It's basically when the VIX goes up, the VIX spikes. A huge spike in volatility is done, and this is bearish for the indices because investors are basically, while the VIX is actually contracting on the downside, it's creating this complacency sentiment, and basically people, buy stocks and indices and so on, and they blindly walk towards the edge of the cliff, right? That's what happened with COVID and so on. And I'm going to give you some examples on how I was prepared for, the COVID drop and why I was actually suspecting a major contraction in the market. But not only that, today's video, basically in today's video, I'm going to give you the following things. I'm going to tell you where the market is most likely going to go. What's next? What's the next best interpretation for the next swing? And the following answer to the most important question of all. Are we in a market crash? Not yet. Are we gonna crash now? Not yet. Is the market crash coming? Yes. When and how? Stick around, I'm gonna show you. So, without further ado, let's just jump on this VIX chart. As I said, weekly time frame right here. So let's just analyze things just a little bit right here. Okay. Now, with this VIX, we have here some spikes. Let's say during the dot-com sentiment, right, with the 2000 dot-com bubble. And then again, all the way up here, 2008 recession, 2009, obviously, right? 2007, 2009 recession. And then on the right here, we have the virus lockdown, COVID-19, which basically made us all stay indoors, right? And the markets, they had this fear sentiment hovering all the way around them, right? So let me show you this. Let me show you how, let's say, post COVID, right? Let's see right here. I was actually saying that either the VIX, I mean, this was happening May 7, 2019, right? So I was ready for basically this greed period with some levels right here, right, on the VIX, saying that we are about to break out and basically go on the upside with the VIX, right? So as you can actually see, if for those of you who know TradingView, you know that this is not fake. I mean, it's just loading the new bars and so on, right? So it did eventually drop all the way down right here towards these levels that I was actually suspecting, and then boom, big spike on the VIX, which obviously caused the stocks, crashing, markets crashing, and so on, right? What now? I mean, yes, I got what I wanted. We had the basically the VIX spiking, the indices falling with COVID. Um, Something happened in the markets. Obviously, I didn't know that it was going to have a virus, right? But something else is in the menu, guys. This, for me, this is just the beginning and just the let's say the broken link for the bigger chain, if you get my drift. Like, it's going to be a chain reaction, guys. I mean, what I'm seeing is basically not COVID being, COVID is just a catalyst for the trigger for what's about to actually happen, right? For the markets and the crash and so on. Is it going to happen now? Not yet. No, no, no. We still have the upside, guys. I do see more upside for the markets, but in a fifth leg of a larger degree time frame. So the fall will be much bigger than COVID, but we're not there yet. We still need to do the upside regardless if it's going to be an ending diagonal or an impulse is really we'll see maybe on the US indices, but we will see. Okay, I'm going to show you. So with the VIX, right, this is going to be a longer video, but it's going to be worth it, guys. I'm telling you. So let's say with the with the VIX right here, okay, we had basically the dot-com sentiment, we had the 2008 recession, and then we had a spike right here following up in 2020, right? February, March. So after that, we went down with the COVID, right? I mean, after COVID, and the markets went up. Now they're approaching, and I'm gonna zoom in eventually. I'm gonna zoom in with the VIX chart, but I'm going to show you basically what I'm looking for in the medium towards the long-term scale. So I'm looking for the VIX to actually provide this type of of correction, right? And then proceed towards the downside in order for us to actually have this type of movements before the bigger overshoot and the bigger contraction. So let me just do this, and I'm going to show you something really cool right here. Okay, you know me, I'm using fractals, but let's take this, right? I'm just going to copy this, right? And I'm just going to make it big, right? It's a fractal, right? And you can actually see it right here. You can actually see it right here, and obviously after that we had the fall, right? For that particular thing. So after this came the downside, and this is what I would be expecting after that. So you can actually see why, right? We had the drop, we are expecting this spike, this one, right? So we can actually proceed to the downside right there. Pretty simple, nothing magical about it, right? So let's just go back right there, okay? And you can see the fractal. It's precisely, I mean, it's not supposed to be exactly the same, but it's the sequence behind it. And this is a sequence for the VIX, guys. I mean, if you want to master, this type of volatilities and stuff, I mean, the sequences behind it, take a look at it. It's running in fractals. All markets are running in fractals. You just need to basically be able to notice them. So now that we have this, I mean, we know basically what we're expecting, right? I'm expecting basically a spike right here and a downside right here, and then the market crash, because we're gonna be booming on the upside, right? We're gonna be starting this again and again and again, right? Only that it's not gonna be, just like that. It's gonna be a big one because the market will end. I mean, it's going to top out, and I'm going to show you why. Okay, let me just do this. So I have a surprise for you. Let's take this chart right here, okay? And this is the Dow Jones chart, an Elliott wave cycle on the Dow Jones from 1915. So we're talking about more than 100 years here of charting data, and obviously the way you actually see this, right? I mean, it's inflation adjusted, it's log scale and so on, right? But the way we are seeing things right here, don't you think that this is an Elliott wave channel? I mean, excuse my channel, but it is what it is, right? So we are either gonna be topping out a wave 3 right here, or these labels are exactly how they are, like 1, 2. Right? So allow me to explain a little bit this chart right here. This is the 1929, 1932 Great Depression, right? And after that, we had the upside, and we moved up all the way up until 1966, right? Until 1976, something like that, for this whole like period of uncertainty, right? It's a sideways move in a wave 4. This is not a wave 2, this is not B, this is not anything. This is 4. Okay. Now, knowing that this is wave 4, we can either go on the upside and top out 5 here, or we can extend the 5th wave in a diagonal. One of these two. There are only two possibilities in this wave 5 to actually unfold. So, if wave 5 is not here and it's going to be here, so in a sense that we have 1, 2, right? And then 3 all the way up top here, okay? And we are ending, I mean, for this market, it's, you know, you can actually see how fast and how big, I mean, how big the bubble grows and how fast the markets go. You take a look at Nasdaq, it's you know, dragging everything with it, right? Until it's not. So we are either, as I said, we are either topping here, okay, a wave 3, right? I mean, in this 1, 2, 3, 4, and then 5th wave, like right here, which means 1, 2, and this is 3, and 4, and 5, or, right? And bear with me, we are doing an ending diagonal. 1, 2, basically 3 is here, okay, and 4, because this is a wave 4, guys, and I have a surprise for you right here, because I'm going to treat this as this. I'm gonna tell you why. So 3, 4, and then 5th leg on the upside. And take a look how the converging lines will actually fit with this diagonal here as well. It's happening in real time. This is how this US indices are, you know, unfolding right here. So I'm gonna take a look at multiple indexes for multiple countries, especially on the larger degree time frames, and then I'm gonna leave you with you know, the daily time frames for the US and EU markets, but also mostly on US. I'm going to leave you with some levels as well intraday, I mean on the very lower, I mean lower degree time frames. So let's say, for instance, we have two possibilities, right? We are either topping a wave 3 here or here. Does it make a difference for us? For me, absolutely not, because the fibs will actually guide us. We're just going to measure this with this and get our fibs. We're just going to measure this with this and get our fibs. It doesn't really make a difference for us. We're still going to have some levels right here. Okay, so the point is, check this out. Take a look at this and take a look at this. I know they are exactly the same. It's an expanding flat, right? So we had basically previously we had this, right? An expanding flat. We had this right here from 2000 until 2009, right? And then we went on the upside, right? After that, and now we're going on the upside. Ooh, right? Well, check this out, and I'm gonna show you something else really, really cool. We did this, right? We're doing this. I mean, yeah, we're gonna see it. We did it already, right? And WX. Basically, this is W, this is X, and this is just the way you see it right there. W, W, X, X, A, which for me is the bottom for COVID. Now, you might ask yourself right now, hey, what if it's not right? I mean, is there a possibility for us to, I mean, yeah, I mean, for this to be this, and we are actually right here, I mean, right here, and we're gonna do something lower, right there? No, I don't really think so, although the next move is down. And this is what this video is all about. I'm gonna give you some levels as well, because the markets, the VIX is gonna spike, y'all. Okay, so prepare for some indices and stocks to have a big contraction, something really, 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 really interesting. okay, which will have question marks, but not for me and not for you as well, because if you watch this video till the end, you're going to be ready for whatever, okay? The next move, in my personal view, the next move is down for the indices, for stocks, etc. If it's going to be limited until the 61.8 from March 2020 until now August 2000, September, let's say, 2020, 61.8 with Fibonacci retracement, maybe 71.6, but I don't think so. 61.8 is my level right here. I'm going to leave you with some levels as well, of course. But question, right? Is the bottom in? Is the bottom in? I mean, COVID. Did COVID actually provide the bottom for this wave 4, regardless of what this is? Because you see, I'm labeling already this wave 4 as a WXY with a triangle in the Y. It's called a double free. Okay, and let's now go to the website. Okay, so now that we found this pattern, right? Let's just go there and actually see it, all right? How it looks like. So let me do this, okay? And I'm gonna load the picture right here, and let's do it just like this, right? So you can actually see it on the right side, right about there, right? This is actually this with a W X A B C D E Y, right? Pretty simple. W, X, Y, and then the trend is up. And this is what basically what happened here. W, X, Y, right? And then the markets went on the upside, right? This was a wave 4 in a double free WXY with a triangle in the Y. Now, let's actually leave this right here and let's just take a look at the at the actual charts right there. Okay, so I took that chart from, I mean, the one in the picture right here is provided by MarketTrends.net, so copyright to that. Now let's just go there, okay? And I'm going to show you basically inflation adjusted. We don't, I mean, we don't need that, and we don't need to show recessions, right? Now, obviously, this is the same chart from here. I mean, it's right there. It's just the labels are placed there. But let's just zoom in to this period and take this towards real time and tell you, I'm going to tell you why I think that COVID low is in, and we're just, I mean, the next move is going to be on the downside for the indices, but it's just going to be 61.8, let's say, of whatever indices you're looking at. And we're going to take a look at Dow Jones, S&P 500, NASDAQ. We're going to take a look at CAC, DAX, a little bit of FTSE, HangSeng, and Nikkei. Pretty cool, right? Okay, so stick around. Now, let's just zoom in right here. All right, so this actually all started in 1966, and for me, this is February February 2018, right? And then we had basically a correction. I mean, you see the zigzag A, B, and then C all the way down to 1970s, and then an A, B, C, X, right? And then the triangle, which is a barrier triangle. Again, let's go to the website and see this pattern right there, right? Let's search for it. Barrier triangle. Okay, let's see it, right? It's basically this one, right? This one, which is, okay, all right, cool. So we have this one, which is basically this triangle right here. So W, X, A, B, C, D, E, which is basically this A, B, C, D, E. Okay, A, B, C, D, E. And then boom, on the upside. Boom, on the upside. This is what's happening right now with the stock markets. Where are we located right now? We are here. We're going to have this. And then the markets will go up, break out, and do the termination points, the last move, the last motive swing for the fifth leg. And after that, may God help us all, because I don't know, you know, regardless if it's a top of three or a top of a larger degree, you know, big contraction. It's going to be big. So 2009 lows are inevitable in any case, right? At least maybe just in the first A wave. We'll know. We'll see what happens. But let's now take this, right? This entire thing and compare it to what's happening in real time in the markets. Now let's just go to the charts, right? So let's take Dow Jones, for instance, right here, okay? And let's take a look at it. Cool. Now, so remember, this is 1960 until, way back. So let's say 1978, 1982, so basically 1966 until 1980s. Pretty cool. So here we have this top, 2018, top, bottom, bottom, top, top, bottom. You you following this? Okay. And then an ABC, ABC, X, right? And then the big drop, which exceeded this, but not only that. Take a look at this, okay? Take a look at this thing. Take a look at this thing. What is this? Yep, either an expanding triangle or a complex double free, which in our case, it's a complex double free. Makes sense, right? So I gave you basically multiple reasons on why this market is actually going to continue. What are we doing now? We're doing this, right? We're obviously doing this, and we're gonna, I mean, this is Dow Jones. It's gonna, I mean, top out. It hasn't created a new all-time high yet because we know that there's a divergence going on between them right now. I mean, S&P 500 and not to mention Nasdaq. I mean, Nasdaq is out of control. It's like, you know, booming. But S&P 500 has created a new all-time high, and it is continuing on the upside as we speak. And we're gonna go intraday, and I'm gonna show you the charts, etc. But what we're doing right now is Dow Jones is diverging, so it's lazy. That's what's happening, right? So uh, with Dow Jones, um, with the Dow Jones right here, we're basically topping this right here, and I would be expecting for the Dow Jones a correction, 61.8, as you can actually see it right here, right? 61.8, and then a move on the upside. How will this look? Well, just like this, right? W, X, A, B. I mean, this is going to be a barrier triangle, right? A, B, C, D, E. And you can actually see it right here, right? A, B, C. It's a free. It can be a B, okay? And this is also a free. Don't think that this is 1, 2, 3, 4, 5, guys. Come on, don't label it like that. I've seen multiple persons uh, labeling it like a 1, 2, 3, 4, 5. Come on, don't be a rookie, right? WX and then Y in this large degree 4, right? And then upside on whatever it comes. If it's going to be an ABC in the fifth wave because, you know, um, let's say for instance, maybe we're going to have this diagonal, right? I mean, we're just going to have, after that, right, we had a triangle, and then we're going to have an A, B, C right here to actually complete the diagonal itself, or a proper impulse, in which case, let's say we're going to basically shoot on the upside parabolic and just do the fifth wave in an impulse and not in a, you know, diagonal or something like that, then yes, if it's an impulse, then this free will be here, obviously, because fifth wave needs to be um, a motive structure and obviously a diagonal, ending diagonal. If it's going to be an impulse, obviously this free will be here. So we're going to have that Elliott wave channel, right, like that. And the fourth wave will be here. We're going to go back obviously to 2009, previous wave 4 of a lesser degree, and the lesser degree would be here, 2009 lows. Oof, right? Big fall right there. COVID is like nothing. So watch out, guys. Okay, I'm giving you valuable stuff here. So let's just continue. Now, what's up with the markets, right? What are we gonna do with the markets now? So I gave you until now reasons on why the markets, I mean, after this contraction with the markets will go up. Now I focus mostly on Dow Jones because this is an example and we're gonna treat it as such. But let's just continue, and from now on we're gonna continue basically um, with the charts and for all of them. So I'm going to take basically on the weekly time frame, daily time frame, 4-hour time frame, Dow Jones, S&P, Nasdaq, CAC, DAX, etc. Right? All these European indices, Asian, some Asian indices as well. But at the end, I'm mostly going to focus on just a few intraday wise. Okay, so you can actually have some trades and opportunities because this is what this video is all about. By the way, if you like what you see, guys, shoot me a message. We'll be more than glad to assist you. All right, check the website, check some details right there. Shoot me a message, book an appointment, whatever you guys want to do. Okay, so with the weekly chart, we're kind of done, right? I mean, with this weekly chart, because there's not much more for me to actually, tell you, since, I mean, from what I told you. So this is either going to be 1 2 1 2 3 4 5. So 3 has topped out. This is right there, and we've done this. There are multiple possibilities for this, or we just topped out here. I mean 1 2 1 2 3 4 5. Okay, then 4 right here in a W, X Y. No, I've seen people labeling like this. No, I don't think so. Okay, I just think that we're just doing this diagonal, right? We have an Elliott wave channel. Yes, yes, we do. We do have an Elliott wave channel, but even if this is an Elliott wave channel, right, we can actually see the bull markets lower points. So that's what I'm saying. Something lower than COVID would actually put us in the Stone Age, because the upside would be invalidated. Really, something lower than COVID March low is going to put us in a bad place. It's going to put indices in a bad place. So, but okay, we do have a divergence on the weekly chart on the Dow Jones, right? Is this it? No, I think not. And I think, as I said, I'm seeing a barrier triangle right here, right? More upside, a little bit more upside. Retracement 61.8. The level is 25,231. Okay, and then basically starting to move on the upside for the fifth leg, and we're gonna have something right about there, and then a contraction, right? So we shall see. I mean, it could be quite extended on the upside and do the overshoot, because the diagonals in the fifth leg, they usually do the overshoot, and most importantly, these indices, they always do it, right? Let's just continue. Now, S&P 500 on the weekly time frame, pretty much the same thing. I have here a channel right about here with an Elliott wave channel. This can be free, I mean 4 right here, right? And then 1 2 3 4 5. That's it. Ending diagonal, fifth leg, boom boom boom. That's pretty much the recipe, right? Notice the median line of this channel right here, right? So this median line has been, I mean, 2008. Then we had 2018 February, 2018 September. Then we had August, September 2019, and the top at February 20, right? So we have basically multiple tops right about here, and now we're doing a top again. right? What do you know? So yes, retracement, correction until this median line for this channel right here, and then boom, the overshoot to gain support on this, boom, 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 ending diagonal, and then that's it, game over, right? That's the recipe for that. Nasdaq, however, on this monthly time frame, right? Now Nasdaq is younger than them. Nasdaq is until from 1970s, something like that, right? has been has been, you know, uh, born and so on. So the way I'm actually, labeling Nasdaq is with November 2007 wave one, then two November 2008, and then a parabolic move February 2000 sorry September October 2018 top in a free, and then fourth wave in a running flat, fourth wave right about here. Okay, so this fourth wave running flat like this, right? And then the overshoot. For Nasdaq, it's quite tricky because you see how fast it's going compared to the other US indices. So I think that there is a possibility for this to actually be a one, and then to just like the S&P 500, right? Um, just like the S&P 500, there is a possibility for this to be a one, two, three, four, and then five right here. But I'm taking a look at this channel. We will see one way or another. This is going to come to an end, and for that we're gonna zoom into the daily time frames, right? So now that we're done with the US indices, let's take a quick look um, at the European indices. But before we do that, okay, this is a question that I actually have from some of you, um, because guys, and to make it clear, yes, I did know that a big contraction is going to come. That's the answer to the question. Um, how did I know? Well, I'm going to show you. But in 2018, January 2018, I actually published a Elliott Wave educational course in which I was saying that a major contraction is coming, a period of uncertainty, and so on. And this is it, right? I mean, this is where we were, and then we started doing like all these crazy like wild swings. And right here, okay, I mean I'm on the Dow Jones chart, but there are other indices that we're going to take a look at. So this is the monthly time frame, and I just need you to take a look at these levels and the arrows. I mean, I'm just saying, I was expecting something on the upside. I was saying like, okay, ending diagonal and so on. But check this level, right? It's 28,500 as a resistance for me because the fibs were actually pointing me towards that. Was it an ending diagonal? No. Did the fibs work? Yes. Was I looking down? Yes. How much was I looking down? Right? Until here. So let's just see. This was in May 7, 2019. Right? Check this arrow where it's ending, and this one as well. Why did I put it there? Well, previous wave for a lesser degree. It's, you know. So, yeah, I mean, previously I said down and up, right? We had a down, we had the up, 28,500, slightly above it, it's fine, right? But then boom, big drop for the ABC, and this was the ABC, right? So, yes, to answer your question and so on, because I've been receiving, hey, especially for the ones that hey, did you know that? Yes, I actually posted analysis and signals on this COVID thing. So if you guys want this type of thing, just visit the website. As I said, message me, y'all, because I'm preparing for some hardcore trading right here. So if you want to trade with me, just send your request my way so we can actually do it. Now let's move on to the EU indices, European indices. Now France 40, so CAC 40 right here on the monthly time frame, and just gonna keep it simple. I'm not gonna spend a lot of time on these things, but this structure on the monthly, okay, this has a possibility either being a complex flat or a triangle. Same thing, barrier triangle right here, and we're just doing A, B, C, D, E. We top, we went down right here, okay, and we're gonna do this, and then boom, breakout, right? That's it. I mean, that's basically what I had to say with this. However, this can also be a complex flat. If it's not a triangle, it can also be a complex flat in an A, either B or whatever. I mean, triangle, whatever it is. I mean, these complex flats can actually extend, right? But it does look like a triangle, right? I mean, it does look like a triangle. So A, B, and then ending diagonal right here, right? C. So we're basically doing, you know, A, B, and then 1, 2, 3, 4, 5. But this doesn't really agree with, I mean, it doesn't really agree with the other ones, right? So I'm thinking to change this labeling to an A, B, C, D, E, and there we go. We basically have our contracting triangle right here, in which case I'm going to move this 4 here, saying that yes, the contraction period has ended. We're going back parabolic with the bull market at least. I mean, even if it's going to be an ending diagonal or something like that right here, right? But still higher than um, higher than those levels, which were basically 2000 .com bubble, right? This is 2007 top and 2020 COVID top, right? Post-COVID. So yeah, I'm thinking that this is a contracting triangle in a wave 4 as well. Even if it's a complex flat, we're still basically, let's say for instance, if this is a complex flat, okay, in a sense that this is just the way you see it, A, B, and then let's say for instance we're doing 1, 2, 3, 4, 5, right? Well, in a 2, this will be the A inside it, so the B wave is also gonna come. Consider the fact that this is a monthly chart, we're still gonna have something on the downside, right? So I'm cool with that. So you see, this is a period where even if the trend is going to move up or the trend is going to move down, the next move, the next best interpretation is down. So this is what Elliott wave gives you, the best, right? So you don't care what the swing will be. You just need to, gain some pips, which is what we're going to do. Now, as for the DAX, one of my favorites, and I'm receiving requests for the DAX to actually, publish this one as well. Okay, DAX on the weekly time frame right here. So DAX, I'm actually labeling DAX from the March, similar to the US indices because it's the most important one in Europe, right? Similar to the US indices, March 2009 as the actual low, right? And then big move on the upside. But the way I'm labeling this is in a diagonal, right? So let me just show you what I mean. A, B, C, 1, 2, A, B, C, 3, WXY, 4, A, B, C, 5. You can see the converging lines right here, right? Now let's do this and try to find an ending diagonal. Okay, so you can actually see what I mean right here. Okay, so 1, 2, 3, 4, 5, right, with an ABC in each one. ABC1, ABC2, ABC3, ABC4, ABC5. Pretty simple. So right now let's go on the actual pattern and you can actually see it right here. ABC1, ABC2, ABC3, ABC4, ABC5. That's our ending diagonal on the DAX. And after that, boom, big fall. And guess what? Big fall. Now, why am I not looking up on DAX in the fifth wave and so on? Because uh, I'm seeing the German economy and European economy as the trigger and the catalyst for what's about to happen, and basically the most importantly, German banks, especially Deutsche Bank, which is gonna most likely drag everything. This bank has problems, yo. And check my profile on Trading Video. I've been posting at them. You know, the price is very low. Anyhow, the point is that I see that as a catalyst. So when I mean, when it will go bust, because it, the main key and the trigger for me is not COVID or something that, you know, this is just a period or something that's is going to pass, right? It's going to be okay. We're not going to die. But for me, the main thing and the guy behind of the curtain is basically the global debts, right? The the real the really the biggest bear of all, the monster, and it's the global debt. I mean, the check out the global debt of actually I think I have here I have something here. Let me see. Check out the global debt of you know, US. Look at this, US national debt from 1900 until 2020, right? We're talking about $23 trillion. What? And this is debt. This is like something which has been caused by printing, by monetary stimulus, by quantitative easing, by this, by that, by this, by that, so that the market will just go on the upside, and we're just gonna like, you know, don't worry about it. We'll deal with it later. When? Because it's going and it's going and it's going, right? What are we gonna do? Like, is this a way out? I mean, what are we? And I'm gonna show you something else that happened I mean, this thing actually happened before a long time ago, and I'm gonna show you a perfect example on a different chart, and you would have no idea on where I'm taking it from, but you know, you'll basically see exactly what was going on there. So with the DAX, what I would be expecting for the for the DAX right here, okay? I would expect it to top out to top out right here. As you can see, I'm not labeling it as a fifth wave on the upside. I'm actually marking this COVID drop as a directly, right? Because this is gonna be the B wave on the downside, and then I mean, in this B we're gonna have an A, B, C, right? So the C should trigger that, right? And this is enough. I mean, while this will go up, I mean, take a look at Nasdaq and you know, S&P 500. The same thing. The DAX hasn't hit a new all-time high. S&P, Nasdaq, they did, right? So it's not. I mean, after such a fall right here, whenever this one goes up right here, it's enough for it, right? And doesn't even have to create a new all-time high. Although I would expect it to do, right? Because this is what happened before. I mean, just a little bit, right? Just to kiss the tops and do a double top and something like that. But yeah, I'm not expecting this to actually be a fifth wave, just a B wave on the upside. Now let's continue. FTSE 500, sorry, FTSE 100. Same thing as the CAC, but with a little bit of twist, because this is not a this cannot be a triangle anymore. This is a complex flat, right? A complex flat on the monthly time frame. So free, I topped it right here in December 1999, which is basically .com bubble, right? So free. Then A, B, C. Okay, let's go for it, bro. I mean, you know, maybe this is a diagonal, something like that. Yes, I know what you might be seeing. This is A, this is A, this is A, and then B, C, and we're doing this, and you know, like, wow, right? Yeah, it's kind of difficult. But the next move for me, for FTSE, would be, I'm trying to keep it as simple as possible, right? A, and then A, B, C, or maybe B right here in a triangle, whatever, right? Doesn't matter, right? So, so right after that, A right here, A, B, C, right? So we completed B, and then we're doing the C wave. 1, 2, 3, 4, or if it's an ending diagonal, this is 1, this is 2, 3, 4, 5, and then we're doing upside because we've completed 4, right? Right here, so 3, 4, and then 5, but nevertheless, we have basically something to guide us on. And there are questions like, you might be asking yourself, okay, Richard, but how would I know I mean, regardless of what the structure is, how would I actually know that, hey man, we're gonna hit the bottom, right? Well, we even see this 61.8 right here with COVID, right? So most likely we're gonna go lower. But how we do it? How do we know? We're just gonna label this. I mean, we're just gonna measure with the Fibonacci extensions for first A with the top and do ourselves. Let's say maybe we have a complex running flat, and it points us towards the 100% Fibonacci extension, right? Which is 4,250, right? So if we do drop here, this will be a high probability to buy it for long term, at least until here, because it's going to go fast. I mean, you saw how fast they went before, right? So, so yeah, pretty much. Now, even for DAX, let's say, let me just go back on DAX because I want to show you this. Now, previously in May 7, 2019, when I actually posted a big article and the market crash forecast and the roadmap and so on, this actually panned out quite nicely. So I had the A, I had the retracement in B, and we went on the upside. Now, obviously, I was expecting some type of overshoot with some higher levels, but it didn't came on the higher time frames. But on the daily chart, I adjusted the levels. I had that box right there with the members and so on. We got the tops, right? We got the specific tops. So we had A, B, boom, C. You see, I was expecting basically after this rise, I was expecting a big drop. So yeah, it happened. Same thing, same thing with the FTSE here with this post, but also right before it happened with this post, right? Okay, so FTSE. Now, something interesting. You might not be expecting this from me, but I'm on the Nikkei chart on the monthly, right? And there's something going on because Nikkei, Nikkei from 19 January 1990, this thing has been, correcting because before that it went like parabolic, right? What was this? It was a bubble. So why did it happen? I mean, why did it happen like that? Allow me a few moments. I'm going to show you, right? So let's take a trustworthy source, and let's go to let's write on Google Nikkei 1990. Okay, it's going to be with an I, but it's okay, right? So yeah, let's take Wikipedia. I mean, the best source ever. So let's just read a little bit what's writing here, right? I mean, bubble economy. I mean, okay, real estate, stock market prices were greatly inflated, which is something that's happening right now in real times, right? Um, okay, the bubble was characterized, okay, okay, and was caused by rapid acceleration of asset prices, which is happening right now, I mean, in our current times, as well as uncontrolled monetary supply and credit expansion, right? Which is basically what's happening right now with the U.S. economy, right? Uncontrolled money supply, more specifically, overconfidence and speculation, right? Excessive monetary easing policy, right? And you can see these guys, these are the Feds, right? What the Feds are doing right now, excessive monetary easing and ECB money printing and artificially stimulating the economy, thus causing this type of bubble once more. Okay, so let's go back. Now that you see what happened right there, this was basically the 1990s Tokyo Stock Exchange crash. So basically what happened there is just what I shown you on the Wikipedia, and it's a trustworthy source, right? This is what happened right then, back then, with Tokyo Stock Exchange. But ever since then, unlike the US indices and all the other EU indices, right, economies, Nikkei has been dropping mostly and correcting ever since 1990s. It has never hit a high, something higher than that since then. However, the US markets, EU markets, mostly all markets have done that, right? But this is actually interesting right there. So how am I seeing things moving forward? Well, obviously, we have this big portion right here in duration and in length and duration and time, right? Obviously, so it's an A, B, and then the C wave. So we would treat this as a W, right? Super cycle degree, and then an X in an A, B, and then the ending diagonal. A, B, 1, 2, 3, 4, 5. Now, obviously, we should have said, okay, we topped out here and we're gonna go down. But guess what? We're not going down. So this just means that we're extending the diagonal, the cycle wave C, turquoise right there, with this one. So we had basically leading diagonal right here. I mean one, right, in the ending diagonal. ABC, right? As you can see, I've been ready for this one as well, right, with the boom, with the drop. Yeah, so ABC2, and now we're doing the wave free ABC in the diagonal. So this for me will be A, then B, and then C. Thus, the stock market's flourishing, and this rise on the monthly chart on Nikkei is obviously going to be the last fifth leg of the US markets, EU markets, basically the emerging markets, right? All globally. So bull leg, bullish move. Bull market returning, but for me it's the last leg because you can see there's, first we have 61.8, 78.6, 88.6. It's gonna be big, bro. It's gonna be big right there. Yeah, so enough about that. Let's just continue, right? Now the next one is the HangSeng, Hong Kong, right? I received some requests for this, so that's why, obviously. Now I was obviously ready for this one as well with that big report that I did previously on May 7th, something like that. Yeah. Oh no, wait, June 2019. Yeah. And this can be either the way it's labeled, but I'm actually suspecting, as the CAC, I'm actually suspecting that barrier triangle as well, in the sense that this is A, B, and then C right here, D. So we're gonna move up, and this makes sense with the indices, okay, with the other indices. So in a sense that we have basically the A right here, B, right, and then C for this D wave, A, B, C, D, E, and then boom, right? Makes sense as an ascending triangle, uh, like that. If it's not an ascending triangle, then it's obviously just the way it's labeled right here, A, B, and then we're doing a running flat right here, 2, 3. This doesn't really coincide with all the other indices, right? So, right? Anyway, we'll see if they do drop one way or another. One way or another, guys, we're gonna have a drop. So one way or another, we're still gonna have this, right? Something on the downside. So the next opportunity is a short for the indices, right? Now that we finished with the US, with a larger degree time frames, and I gave you the market crash bigger picture, right? Let's basically continue where we left off, but we will actually zoom in to the daily time frames on the daily time frames and the 4-hour time frames. So yeah, that's good.